Welcome, ladies and gentlemen. Commodity TV still here in Zurich for the Precious Metals Summit 2017. And with me here is now for the first time Ashanti Gold, and Tim McCutcheon, the CEO, wants to give us an insight into this, new company. Welcome.
Yes, thank you. Thanks for having me.
Yeah, great to have you here. And Ashanti Gold, what's the company about? It was founded last year, August, you said?
That's right.
For a special purpose. So explain why.
Yes, thank you. The Ashanti Gold is basically an investment banking idea. If you look at West Africa, the major companies are increasing the amount of money they put into the country. So that includes Randgold, B2, Anglo, Endeavour. All of these major companies are increasing their capex in West Africa. However, if you look at the junior mining space, it's completely dried out. Basically, I did an analysis. If you look from 2012 to 2016, about 80% of all junior mining companies died in that time period. About 10% were bought out, and about 10% are left. So the simple fact remains that when these majors want to expand their project horizon, want to have a pipeline of projects, there's nothing for them to acquire. There's nothing in the region that's being developed right now. And that was the opportunity from a top-down point of view.
Okay, perfect. And so you want to be the one who finds the real good stuff and then be acquired maybe.
or a partner up or whatever.
Exactly.
And whenever you build a company, you build it with the assumption that you're going to be taking it to the next major stage. But the bottom-up part that was really exciting, where we had the opportunity, I'm a firm believer in business that you have to know things other people don't know. Otherwise, you just might as well go to the casino. Yeah. And we knew things other people didn't know. We had databases from our past records of working there that other people didn't have. We had dialogues with certain companies that basically the relationship was there for many, many years. So we were able to strike deals very early on that were didn't drain the treasury at all. Fantastic projects that were misunderstood by the market. Essentially, projects that were de-risked, and yet the market hadn't priced them because it was caught up in this whole liquidity, lack of liquidity in the past 4 or 5 years.
Okay, perfect. Then let's dive into your projects, which countries you are working in Africa, and what the projects are about.
Super. So our core project is something called Kasanto East. It's in Mali. It's in the very, very far western part of Mali. It's literally on the border with Senegal. We're about 40 kilometers north of Lulo, which is Randgold's super mine. We're about 40 kilometers south of
Elephant territory, I would
call
it.
I mean, big elephant territory. Well, that's interesting you bring that up, because we're on something called the Keneba Inlier Shear Zone. West Africa is all about greenstone belts and shear zones. That's where gold pops up usually in those areas. The Keneba Inlier Shear Zone, which is basically where we are, is home to over 40 million ounces discovered and put into production over the past 20 years. There's nothing else like it on the planet. It's the hottest gold district right now in the world today. All of the majors are there, and they're all expanding their footprint. So we're right smack in the middle of all of that. We have over $10 million of work was done on the property before we acquired it. Nice. But because the underlying owner basically had some liquidity issues, we were able to buy it for $1 million Canadian.
Wow.
So,
because 10 cents on the dollar.
Essentially, well, even more than that. But basically they needed the cash right away. We had the available liquidity. But the project was just fantastic in terms of the drill results. What makes the project so exciting is we have combined strike length of over 2.3 kilometers long. The average width of mineralization is from 50 to 100 meters wide, and it goes down for, essentially shear zones go down to the end of the earth, but let's call it 150 meters deep. We know in this part of the world it's about 2.6 specific gravity per cubic meter. So if you do the math on all of that and the grades that we've been drilling, it looks like it's going to be a major deposit.
Okay, wow. Can you elaborate a bit on the grades you have drilled so far? What
we've drilled, from surface to 75 meters of over 2 grams. Just this summer we drilled 35 meters from surface at 3.3 grams. Big,
so very consistent
holes.
also.
Consistent and chunky holes. These are not the sort, we're not going to be chasing little bits of mineralization in between, nothing. We have very big, large intervals of high mineralization. And the key thing about this deposit that makes us different, I think, from a lot of the others in West Africa, so far we haven't found any sulfides at all in the deposit. So we have the top 40 meters of the deposit is oxide, so that's great for heap leaching, whatever. Everyone knows that. But everyone assumes that you have oxide, below the oxide is going to be a sulfide material. We don't have any sulfides at all. So I mean, when this thing goes forward, the cost of putting this into processing our material is going to be materially lower than our peer group, whether it be Orezone, for example, whether it be West African Resources, Cardinal. We don't have any sulfides at all that have come up in the drill holes that we drilled.
That's fantastic, great. So when can we expect for the 3-101 on that?
So right now we've mobilized the site. We drilled 6,000 meters in the summer. We're mobilizing the site to drill another 10,000 meters. Historically, over 11,000 meters has been drilled. So combined, we'll have more than enough data to put out a maiden resource in the NI 43-101. The idea for that is in early spring. And then that will be a real benchmark event, right? Because our peer group has similar type assets, but of course they have that metric out there, that number to compare. And we come out with that number, people will see the value discrepancy is huge.
Okay, fantastic. But you're not only working in Mali,
That's
you're
right.
also in
We're in Ghana as well.
second country,
That's
exactly
right.
Ghana. So let's give an insight in that also, please.
So Ghana is a really interesting story, and this is really very much bottom-up analysis. I used to run Kinross's joint venture for exploration in Ghana in 2012, 2013. And the company was sold off to a third party, but I had all the data. And so what was really interesting is analyzing the data and then talking with my colleagues and peers at Kinross was we could scoop up 3 of those properties that I managed back. So I got them back. Basically, long story short, Newmont's Achim mine, it's one of the largest mines in Africa, makes 500,000 ounces a year. It's 4 years into an 8-year mine life. They're basically running out of things to put into their billion-dollar mill that they built there. And our properties are adjacent to and have the same geomagnetic, geophysical signature that everything on Achim has. Basically, it used to be part of that land package, but Newmont farmed it out before they knew what they had.
Oh, okay.
So now we have our hands on it.
for you guys.
Well, it's fantastic for us, and we have historical drill results that are just absolutely spectacular. We're talking 10, 12 meters of, well over a gram, sometimes even as high as 8 grams per ton. And all of this is at surface. But it's historical data, and because of the corporate shifts between Redback, going to Kinross, going to the joint venture, going to a private group, going back to Kinross, for 14 years, the paperwork was lost in someone's filing cabinet.
Wow. And you found it.
Yeah.
That's a big advantage. Also, here the question, of course, 43-101, when next year?
Well, for this one's a little different. This one's going to be neat because the real game plan here is to work together with Newmont.
Okay,
right?
That makes sense.
So they need the material. I have the material, and so we'll sort of see how that goes. But the idea is to partner up with them.
Okay. So that, okay, then I have to turn the question a bit. That would be something like not to go direct, let's say not to go the normal path. Maybe you say, okay, as Newmont needs the material, we drill it out and then we dig it out and then we process.
Essentially.
And
well, that could happen. That could happen too, yeah.
And you can make money.
Well, that's right. I mean, I think the key thing about Ashanti that I really want to get across to your viewers is with Kasanto East, we have a project that is potentially, multi-$100-million type project because the peer group in our area are all multi-$100-million companies on assets that we think we're going to be very analogous to, in fact, probably better than a lot of them. That's number one. But number two, with the properties we have in Ghana, we can turn Ashanti into a cash flow generating mining company without actually having to build a mine, with all the risks associated.
That's what I meant. Yeah,
exactly.
perfect. Super.
Exactly. So that means, that basically means as soon as that happens, no dilution.
Yeah.
Basically internally de-risking, internally funded cash flow for all of our development work.
Wow.
So it's an exciting time.
Absolutely. It was a great final sentence. Thank you very much for that. And I really like what I hear. That's very interesting. And good luck for your endeavors here in Ghana, of course, because to work with Newmont and to make money before you even have started the large exploration, I would call it. Yeah, that's outstanding because the risk is fading away from the company.
That's right.
Super.
Very good.
Thank you very much.
Thank you.
Ladies and gentlemen, it was Tim McCutcheon, the CEO from Ashanti Gold, and you heard it working in Mali and in Ghana. And doing great things. The drills are turning. The news flow is up, and in approximately 5 to 6 months they will have their 43-101 for Mali, and also in Ghana there's the chance to work with Newmont together and to start right away, maybe next year already, to make some money, and that would be fantastic to de-risk the company. So check it out. Thanks for watching us, and bye-bye from Zurich. That was the first day.
Thank you.